I think on one hand, obviously amazing honor and, very happy to be recognized. And it brought a bunch of notoriety and more business and some exposure. But I don't know, maybe it sounds arrogant to say this, but I feel like you only really win awards like that if you don't care about the awards. If you
Exactly.
focus on, building something real, something important. And I don't know. For me, it was like never really about the awards or the money. And it's nice. Don't get me wrong.
It's really nice to be honest to be recognized for the hard work because it takes a lot. You put in a lot of hard work into it.
I think it's nice. I think just because like humans were like inherently vain, and sure, it's nice to be recognized and, to be put on a podium, and, it helps with the business and the other things I want to do. And it helps with fundraising and, getting on some incredible podcasts like this one.
Welcome to the King Dems podcast, where we share the stories of extraordinary people and dissect hot, relevant topics that shape our world. From visionary leaders to trailblazing creatives, we uncover the mindset, strategy, and grit behind greatness. Whether it's business, culture, or personal growth, we ask the real questions. This isn't just conversation, it's transformation. The King Dems podcast. Your next breakthrough starts here.
Music licensing reimagined.
We are live, ladies and gentlemen. You once again welcome to the King Dems podcast. And today I have with me a very fantastic guest all the way from the West Coast, San Francisco, United States of America. Please make welcome Alexander Harmsen, the co-founder PortfolioPilot.com. How are you, Alex?
I'm doing well. Thanks for having me on. Good to be here.
Wow. It's really nice to have you on, right? Alexander is a very, very great name. It has a lot of history, Alexander the Great. And how about you? What's your own moniker? What's your own nickname? Is it Alexander the Greatest or something? You have to talk.
I feel like I shouldn't say those things about myself, something to live up to, right? Being known, thousands of years later. I think, so I was born in Holland, in Europe. And
Wow.
I think in reality, my parents thought it was a great name, but also sort of the prince at the time and now king is named William Alexander. And so I think I was partly named after this king as well. And now, we moved to Canada, and, it wasn't a very common name in Holland, but in Canada, and then, eventually now the US over the last 8-9 years, it feels like, every single class I ever had, there was, multiple Alexes, and, female, male. Feel free to call me Alex.
I'm telling you, female and male, it's crazy, Alexas. I think that those are the females.
Alexis, Alexandria, Alexa, Ali.
Yeah.
Throughout my life, a lot of people just called me Harmsen. And I did a military thing
that is
for a little while. And so it was like Sergeant Harmsen, Corporal Harmsen, So I feel like you always needed sort of the last name part of it as well.
Yeah, because, that basically is a differentiator. And I know people in the US can be very, very savage with giving people nicknames. Sergeant Harmsen. I think that's cool. That's cool. The military is great service. Well, before we started the pod, I was telling you about my friend who was very angry he did not make it to the Forbes 30 under 30. And because you made it, I think he's going to have a board to pick with you. Just talk briefly about, the Forbes 30 under 30 thing. What was the recognition like for you, and what was the basis of that recognition?
Yeah, it's a good question. I think on one hand, obviously amazing honor and, very happy to be recognized. And it brought a bunch of notoriety and more business and some exposure. But I don't know, maybe it sounds arrogant to say this, but I feel like you only really win awards like that if you don't care about the awards.
Exactly.
If you focus on, building something real, something important. And I don't know, for me, it was like never really about the awards or the money. And it's nice, don't get me wrong, You
It's
know,
it's really nice to be honest to be recognized for the hard work because it takes a lot. You put in a lot of hard work into it.
I think it's nice, I think, just because like humans were like inherently vain, and sure, it's nice to be recognized and, you know, to be put on a podium, and, you know, it helps with the business and the other things I want to do. And it helps with fundraising and, you know, getting on some incredible podcasts like this one.
Yeah, King Alexander on the King Dems podcast.
I started, you know, I lived in Canada for a really long time, and Germany and India and LA and San Francisco. And I started my previous company sort of back in Vancouver. And even in Vancouver, in that very first year of the new company in 2015, we were doing AI and robotics and autonomous vehicles and, you know, very early deep learning and neural networks. And we had raised $360,000 of venture capital. And like we were like in the top 1% of Vancouver startups. And I was getting invited to speak at all kinds of places, and I was winning awards. And, you know, people were coming like, please, can you mentor my startup and give me advice? And we had done almost nothing. You know, like if I look back, you know, 10 years ago, you know, 2015, I honestly can't believe what were we spending all of our time on. We accomplished nothing until, you know, for the first 3 years, we barely made anything and wasted so much time, and we weren't talking to the right people. And I went through Y Combinator, you know, this accelerator program right in San Francisco. And in the summer of 2016, we moved down for 3 months to the Bay Area, you know, to Silicon Valley, and lived in an Airbnb. There was 5 of us in the company at that time, you know, 4 rooms. My co-founder and I were sharing a bedroom. And, you know, like this show, Silicon Valley, you know, the living room was our office, and we had a couple desks and laptops set up. And I went to parties and I met other people, and, you know, I would tell them like, wow, you know, we raised a little bit of capital, and they would say, hang in there. You can do it. Just keep your head down. And it starts getting really hard, you know, once you hit $10 million and, you know, have a team of 50 people. And, you know, that's when it starts getting serious. And it was just a completely different mentality. And I actually thought it was incredibly humbling and very important to surround myself with people operating at that sort of scale.
Mm-hmm.
Whereas, like, you know, the speaking gigs and advisor roles and, you know, winning awards, you know, living in Vancouver didn't help very much. You know, it made my head bigger, but, you know, in terms of like actually doing something meaningful in the world, you know, it's like, it was almost a distraction to win these things. And I mean, Forbes Under 30 has been really interesting. I've met lots of really interesting people. It opens doors. And, I mean, actually applying, I mean, I honestly think, like, I don't know, I think probably just after we raised our Series A, you know, we raised $8 million or something like that from one of the top tier, you know, venture capital funds in the world. And like, maybe I think we had just bought an airplane because we need to collect lots of test data and collision avoidance data. You know, we were building Iris Automation. My previous company was a collision avoidance company. And we would put these collision avoidance systems, you know, computer vision-based collision avoidance systems on drones or air taxis. And we needed to prove that they would not collide, right? That they would get out of the way if there was a Cessna or a hot air balloon coming. And we couldn't just rent airplanes and fly them at drones, right? No rental school or flight club was giving them to us. So at some point, we just bought an airplane and went into the desert outside of Nevada and opened an office there. I think we did something like 25,000 midair collisions.
Whoa.
I mean, not actual midair collisions, right? But like within 150 feet or something like this. I mean, very close. And I mean, I think there's like crazy things like that, right? You just need to
sound like crazy adventure simulations, you know?
We built a massive simulated environment and then millions of flight tests in simulation, different lighting conditions. You know, we hired the guy who did the graphics and simulations for Jurassic Park and Star Wars.
No
Like,
way.
he was one of like the core engineers that worked at Industrial Light and Magic, ILM, which is like the graphics studio behind, these big name films, and working with Spielberg
Steven Spielberg.
and like, I mean, we needed to be able to like do lighting conditions that matched exactly what's happening in the world. But at a certain point, you present this to the FAA and the Transport Canada and, all kinds of different civil aviation authorities around the world. And they say, well, it's nice, I mean, to show that you have a million simulations, but what about the real world? Show us real collision data, where you have near misses and your aircraft actually avoided. And at a certain point, you need to do it for real too, right? With the simulator helped a lot, but you need to collect enough data to show that it truly works at a certain scale. Even with, the Boeing 787, you need tens of thousands of flight hours on it before you can put any humans on it. Before you can carry passengers, after you do millions of hours of simulation testing and all that. It's serious business, right? Flying. If it goes wrong, then it really goes wrong.
You guys went all out.
Yeah.
And that's
and it's
massive.
I think it's one of those things that, like, obviously it's very difficult to do, right? There was a technical challenge of, like, how do we even do these, like, deep learning models on board, computer vision, real-time processing, embedded GPUs? How do we collect enough data? How do we prove it out? We need to get the regulatory challenges. You need to raise a significant amount of capital. There's like all kinds of execution risks. It's a big B2B business. Will people even pay for it? The market is sort of expanding as you go. A lot more risk than
tech.
Some app.
It's fast-paced. Right? It's fast-paced. Even with your research and development, like the market could just, would I say, rapidly, or let me put it, the technological advancement, could rapidly outgrow what you are even trying to research.
I mean, in the course of the 7 years that I ran Iris Automation, we went from I don't even think deep learning models were a thing when we started the company, right? Like LLMs.
You guys had that first mover advantage.
Yeah. We did, there was neural nets and then deep learning and every single, the crazy things, we built a massive data set and, simulation models, and the hardware, we had all these relationships in the industry and the regulatory, conversations, and we were part of a whole bunch of different standards committees. And so we actually celebrated, every time there was some new deep learning model or some new advancement and better computer vision tracking, or NVIDIA would release a new embedded GPU chip. It was like a big celebration in the office, right? It was like, wow, suddenly by not doing anything, our whole system now works, 20% more accurately or 15% faster, or we can test 5 times as many edge cases as we could before. I think there's lots of companies these days, in 2025, I think there's lots of companies
the landscape has changed,
are getting run out of business because they were doing something and now this large language model is, doing it out of the box. But I also think that there's some companies that, if you set it up right, every single time there's a new improvement to the model, then your company gets better.
Adapt. Yeah.
Obviously, I'm super biased about this, but I like to think that, what I'm working on now with PortfolioPilot, this AI financial advisor, is one of those companies. Large language model that gets dropped. We are going to have a better system that comes out. If there's a new version of a recommender engine, then our core advice engine is going to get better. If there's new, better multivariate forecasting models, our forecasts that we generate get better. If there's better ways to do knowledge graphs, or better ways to do marketing, we can reach more people with the same tech and product. If a better version of Cursor or Windsurf comes out, our engineering team becomes 20% more efficient. I think it's only upside. I'm very, very non-concerned about, competition or being replaced. I think we just need to, every single week, just increase the velocity and just move faster than we were the week before. And if that's the case, if we can stay focused on the goal, if we can have this feedback machine from lots and lots and lots of customers, then I don't know, how can we lose?
You know something, right? I love people with an optimistic attitude, and you need that crazy level of optimism in order for you to be able to, would I say, achieve something great in life. That's one common denominator among people who achieve great things in life. People have to see you as crazy.
I was listening to a talk yesterday evening from Vinod Khosla, right? This famous venture capitalist. And he said, like, in the course of the last 35 years, no major innovation has come from, the establishment, from some big government organization. It hasn't come from some major tech company or, financial institution. All of it has come from foolish people. And he said, foolish people, when I say foolish people, I mean, the individual entrepreneurs who have a crazy optimism. And foolish sounds really negative, but in reality, it's people that can trick themselves into believing that they can actually change the world in some way. And
There's something I saw
like that.
on social media. They said Delulu is the new Solulu, right? Meaning you have to be delusional for you to be able to, create these great solutions. But
Exactly.
I'm thinking in my head, like, why AI for you? Like, there must have been something that sparked that passion, because you are very, very passionate about what you do. And now you are integrating AI in finance. But what's like your educational background, and like what sparked that interest and that passion?
I did, honestly, I was really into planes from a very early age. I got my pilot license really early on.
I see.
I was like dead set on being an astronaut for like many, many years. Like I did some military stuff. I got my pilot license. I got my scuba diving certificate.
Scuba diving.
Worked with the Canadian Space Agency. I started the Vancouver Space Society.
Wow.
Worked on a whole bunch of astronaut mining projects. I started up something called UBC Orbit, sort of like the first satellite design team at my university. I went to get a STEM degree. I couldn't quite figure out what exactly I wanted to do. I sort of wanted to do everything. And so my degree in college was a mix of engineering, physics, and economics. And the things that interest
I did a degree in economics.
There we go.
So just a subsect.
In many ways, economics and physics and engineering, they're all sort of the same. It's a lot about the sort of fundamental mathematics and modeling, and it's taking very complex real world systems and translating them into models or code in some way. I always like that. The idea of organizing the world, taking something that's extremely complex and then turning it into something that, we can actually use. I always like the idea of making something more efficient. So a big part of the reason why, drones and air taxis and sort of robotics were really interesting to me is, I got to do a lot of the aviation, scratch the aviation itch, but also, here it's completely, automated robotics, software, allowed me to model the world. It's a very complex challenge, right? How do you interact with the real physical world? How do you think about, at a certain point, we had a camera mounted on board these, commercial drones. And we're not talking about photography drones, right? We're talking about pipeline inspection, a drone doing 400 miles pipeline inspection, trying to find leaks in the pipeline, before, it's phoned in by, some random farmer 3 weeks later, right? It's agricultural surveys and cargo delivery and, forest management and, these sorts of things. And so it's a lot of these dull, dirty, dangerous jobs. Feels very inefficient, for humans to do jobs like this, to do large-scale surveying. You just can't do that with airplanes. It's too expensive. And so the idea that you could come in with some sort of autonomous vehicle or robotics, sort of scratched all these itches. There was a huge opportunity here, and you needed someone foolish enough to think that they could actually take this on and take on all these different risks. I also think, for me, I'm like fairly young. I mean, I have a family now,
Yes, that's another factor. When you're young and you don't really have responsibilities, you're able to take on risks,
like
right?
what
Your risk
was the
appetite is deep.
downside, right? Like
Yeah, because you're like,
worst
well,
case
what's the
scenario,
downside?
we build this company and I drain all of my savings and I'm sleeping on my friend's couch, but I speak at conferences and I build a massive network and I learn tons of stuff and we've built something interesting and we've at least taken this problem and like moved it forward a couple years to so that someone else can learn from it. I'm at the end of that 3 years that worst case it results in failure. I'm going to be much more employable than I ever was before, right? I mean, if I'm thinking now like the kind of people I want to hire for my team, I would rather hire these people that like really just took a big swing and tried something and figured things out and innovated and then I don't know, someone who just takes the safe path and goes and
Yeah,
works in some big corporate job.
I very,
And
very
so
much
the
align with you.
downside just feels so low.
But not everybody, thinks in this way. And it aligns with my curiosity about what you're talking about, right? Because in finance, especially in investing, people are categorized into three boxes in terms of their investment risk appetite. You have the risk takers, also known as the risk lovers, which you actually fall into that bucket. You have the risk neutrals. I think I am in that bucket. I love risk, but I like to like take calculated risks, try to analyze it, evaluate it. And you have the risk averse. They don't even like to take risks at all.
Right.
Right. And looking at your risk appetite, it is usually not in line with the guys in the regulatory authorities. They they don't like it at all. You and I, we share something in common. You did economics as part of, your major. And interestingly, I was a science student, as well from high school. The whole physics, chemistry, I understand the basis. And I think it gave me an empirical methodology and that approach to life. It's usually lifelong. And you would agree with me, once you very much understand the concepts of physics and chemistry, and you apply it, you internalize it, it just affects everything you do in your life, basically, and how you see the world, your worldview, the way you approach everything in your life. And I love the fact that you talked about the models, right? I studied economics, and you see what we do, especially in things like, econometrics, where we build these models, we adapt models, right, to solve real life problems, but we condense them. But remember, in these models, we usually have the independent variables and the dependent variables. The major criticism from, people of the negative schools of thoughts is usually like, oh, you cannot have a controlled experiment in real life situations, right? So typically in economics, they'll say ceteris paribus, all other factors remaining constant. And then they'll tell you other factors will never remain constant in life, right? And that you can never capture certain variables. But the thing is, if you actually prepare your model properly, you can, to a very large extent, mirror real life situations. Right.
Yeah, I mean, I always like this phrase, all models are wrong and some of them are useful.
Yes, some of them are not just useful, practicable, pragmatic, right? But where I am highly, highly curious is how are you guys able to convince, especially the old heads in the regulatory bodies, to have a buy-in on your outlandish projects?
So
It's difficult,
I think
but I want you to touch on it.
I did it with my previous company, right? With Iris Automation, we had to work with the regulators and actually get regulatory approval before we could fly beyond line of sight and actually be able to use these collision avoidance systems to do like mid-air risk mitigation. And then now, with PortfolioPilot, we actually operate as a personal AI financial advisor, and we have a fiduciary responsibility, and we can give completely automated, personalized advice. We're regulated by the SEC as a registered investment advisor, just like other human financial advisors. I had to write the Series 65 exam, just like every other investment advisor representative. And it allows me to do these like quarterly algorithmic reviews of the system. We have a 400-page compliance manual, do regular audits, and we're held to a similar standard. And so your question of like, how do you convince regulators to do something like this? One, it's a pain in the ass for sure. It's not easy, and it takes time and patience. And before I go into the practical of it, it does mean that like there's a certain moat to the business, right? It's if you decide to go through that pain and go through the other side, then you are in a much better position than everybody else, the 99% of people that decide not to do that and to stay operating on one side, right? You cannot provide, in the US at least, you cannot provide and charge for financial advice unless you have this regulatory approval.
Exactly.
Unless you have the approval to operate as a registered investment advisor.
And the compliance is difficult to line with.
I think a lot of it is, with Iris Automation and for these collision avoidance systems, there were no rules at all. And so we actually had to work side by side with the regulators. I went to DC a lot, to Washington, DC, to meet with the FAA and to meet with standards bodies and ASTM and RTCA, and we would submit proposals and simulations and papers specifically to say like, you don't need to do it at all. We're just one company, but we think you should do it this way, right? Here's 23 pages of logic and rules, and just to help them out a little bit, we hired lobbyists in DC. We paid money to be able to, to influence the rulemaking and like some of the direction and where the focus went. Kind of wild to see how rules actually get made, right? At a certain point, it's just some people that prioritize it. There's a whole bunch of meetings and agendas and what do we talk about first and how do we write the rules and what is safe enough, right? Can you imagine like some team of people at the FAA needs to decide how many people will we allow to, how many crashes, how many mid-air collisions will we allow every single year, right? What is an acceptable number? The only way to get it zero is to just ground everybody and say, no one gets to fly.
Exactly.
Which is obviously also unacceptable. And so it's a huge part of the self-driving car debate, right? Is it good enough for these robot taxis to kill 40,000 people a year because that's how many humans die on the road? If they only kill 30,000 a year, objectively, that's a massive improvement from where we're at right now. But, oh man, can you imagine the news headlines if, 30,000 people are dying because of autonomous vehicles on the roads every year? Obviously, the standard they're held to is much higher. And so how do you decide what is acceptable? As a regulator, how do you feel comfortable, with your career being attached to some decision you make to approve some startup, and allow them to get it? We did a lot of live demonstrations across the country. I flew to Kansas with our team and we did live demonstrations, in a field in the middle of nowhere. We flew to Alaska because the FAA wanted to know, does it handle snow okay and ice? And what about Florida and water? And what about Texas? And what about desert and Nevada? What about the mountains? And we did testing all over the country to prove that the system worked in these different places. And But also, I think a huge part of it was like building the system in such a way that it was understandable. And so I think
Yeah.
we're dealing with people, and we're always dealing with people, right? I mean, the idea that you have some AI system that is just a black box, data in, some result, advice, model out. I think it's very difficult for people to trust that. And
Very extremely difficult, actually. Extremely
we
difficult.
we built these hybrid AI systems, and I think that's been a big part of the reason why we've been able to get, regulatory approvals and permissions. And basically, like with Iris Automation and with PortfolioPilot now, we basically have this, what we call like this explainable hybrid AI system. So we have different layers to the model, and like you can actually look inside to see what's happening. It's practically, if you're a user of portfoliopilot.com, you sign up, you answer a bunch of onboarding questions to learn a little bit about you. You can upload a statement or connect to your account, and then you get an assessment. And we're not just telling you good or bad, right? We're telling you why we arrived at this conclusion, right? If we're looking at retirement readiness, here it is. You can click into it and see everything below the scenes. If we're looking at, your expected returns, you can dig into the individual forecasts and the models and the way that makes up. If we're looking at, you're not diversified enough, or here's this issue with downside protection, you can click through and look at historical crisis simulations that we've done and what happens if we took your portfolio through the dot-com crash, or you're not quite prepared for long-term estate planning. Like, we know you have kids, and we know you live in the States, and we know that your net worth is like this, and we know that this is your risk preference. And so, here is a checklist of things you should be paying attention to. And so there's something about being able to unwrap it. So the end user or the regulator needs to unwrap it and sort of look below the surface to trust it. And I think that's a huge part of what it takes to be able to actually have people trust AI models with something as important as aviation or autonomous vehicles or personal finance, right? I mean, I don't think we're quite ready yet as a society for AI to manage our money. But the idea that AI can give you a second opinion or find some optimization opportunities for you,
Or make
that
recommendations.
feels like I think most people are bought into that idea. It's like, okay, yeah, I like that. Especially if you don't make the decision for me and do some automated trading for me. If you do 95% of the work and
human beings want agency, They want
Exactly.
agency. They want to be in charge of that decision making, and understandably so. Like, I can relate to that. But man, it's just a roller coaster. It's beautiful seeing I use AI and I understand the power of AI, especially in terms of the very rapid machine learning. The machine learning is astronomical. So, but
Right.
people, especially the old school, let me put it that way. I'm a millennial, and I feel like I'm in between the generational wars between, the Gen X, the baby boomers, and of course the Gen Zs. So the Gen Zs are very, very AI, very pro AI, and the millennials are kind of divided. So I'm one of the millennials that is highly pro AI, and you see, it's a battle. So basically, it's a mindset, a mindset basically. So some people need a mindset shift in order to be able to adopt it and to favor it. And I know that in the course of your what's it called, your interactions with regulatory authorities, right? You would have had interactions with certain persons who started off being, against AI, but because they probably had like a good head on their shoulders, right? They were able to be convinced to see the benefits. But your own life, your own journey has been like, man, it's been like a sci-fi movie. From working on NASA's mass helicopters, to leading tech ventures. It's just a hell of a roller coaster. Diving away from the technical side of things, how have these experiences shaped your own mindset as a person, as a leader, and of course as a business?
I mean, the crazy thing is, if I look back 10 years ago at starting Iris Automation, I think, like, man, what an idiot. Why did people give that guy money? Like, why? Like, so naive to think we could solve the problem, in 2 years, and it was going to take 7 years, with hindsight. And, maybe it's like back to our foolishness conversation before. But I think the wild thing with Iris Automation is that there was a significant amount of persistence, right? And so, we hit certain walls and it was just like, let's just figure it out. And I think there was this, naive belief that we could just solve anything given enough time. And, if we pushed hard enough and had enough all-nighters, whatever it took to blast through that. But I think a big part of the reason why it felt so inefficient, I think, compared to this time around, is because we did not realize that people did not want collision avoidance systems until like 4 years into the business. Literally, the business that we built was computer vision based collision avoidance systems. And I mean, the crazy thing is that everybody told us they would buy a collision avoidance system, right? Like we did talk to customers. It wasn't like we just were a bunch of engineers sitting in a room, just, let's build a collision avoidance system. And when we finish it, then everyone's going to come and buy it from us. We spoke with customers and they said, yeah, we want a collision avoidance system. And then when we finally finished it, we went back to those people and said, look, it was more difficult. It took us twice as long, 4 years instead of 2 years to build it. And we did all this testing and it works. And here's how you plug it in. And we're going to sell it to you at this price. And then they said, well, we don't want a collision avoidance system. What we really want is the regulatory approval that comes along with the collision avoidance system. And so just buying the collision avoidance system without also having the regulatory approval doesn't help us at all. And then when it really came down to it, we asked people, at a certain point, I actually remember talking to a customer and asking them, if we could give you the regulatory approval without the collision avoidance system, would you want that? They said, yes, of course. It's kind of annoying to have to mount a collision avoidance system on board this, aircraft. It's extra size, weight, and power that we don't need, and something else that can go wrong, and sort of annoying alerting system. And so at the end of the day, we had to build the collision avoidance system to get the regulatory approval, but every single one of our customers actually didn't want the actual technical thing that we were building. They were reluctantly buying it because, it came along with the regulatory approval. Even once we got the regulatory approvals, we had like a 300-page packet that we shipped along with the collision avoidance system. We allowed people to copy and paste, the thing that would get them the approval. And they said, still, this isn't that useful for us, right? Like a lot of the businesses that we were selling to were very laser focused on this is what I'm doing right now. Obviously, this is really the regulatory approval that people wanted was to be able to fly beyond line of sight of the operator. So they could do an agricultural field inspection, but basically with a 1 mile radius. And if they got the regulatory approval to fly more than 1 mile away beyond line of sight, then they could do 10 by 10 miles. So 100 times more area that they could cover. And obviously, that's going to make a big impact on the business. Obviously, everyone wants that. But they said, I don't necessarily want it today, right? Today and next week, I have these jobs that I have to do. I can't just spend 6 months working with the FAA, integrating your collision avoidance system. If you have it available, plug and play, if I can just pay for a service and you guarantee it for me, then I'll do it. But not if I have to figure it out myself. So they didn't even really want just the regulatory approval, right? They think that we could just drop in for them. And so we ended up, things really started working for the business once we had the collision avoidance system built. once we had the regulatory approval, and crucially, we launched our regulatory consulting business, just the services business, to write people's applications for them, to give them the templates, to work with their specific concept of operations, their drone and antenna stack, and everything that was part of the operation. And then people said, okay, for $45,000, I'll sort of up-level my business and I don't need to do anything. It's like, no, we'll take care of everything. All you need to do is just pay the money. And we would even just charge based on completion of the project. So there was truly no upfront cost. And once all those pieces clicked, 6 years into the business, finally things took off. And that's when we really, really, nailed it.
Wow.
And so,
you know what happened there, right?
Oh, man.
From a business perspective, now, you talked at some point about the audits, right? For me, I've been an auditor with the big four accounting firms, PwC, KPMG, and of course, the auditors will always align with the regulators, basically. Right. But on the business side, right, my understanding of these captains of industry is this: they don't want anything that will in any way, even by 1 inch, reduce the efficiency of the operations. You clock that, right? And of course, that is the reason why they don't want the anti-collision systems, right? Because it's not a fantastic idea. It's really, really brilliant. But if it's going to reduce my operations efficiency, the onboarding, the trainings, right? The extra costs, why? Think about it.
And 100%, and I think it's the same thing this time around, right? Like,
but you guys finally nailed it
with
the consulting.
PortfolioPilot, the thing is that people don't, like, we built an advice engine, right? The ability to import your portfolio, and we can tell you, you should buy this stock or you should sell this ETF. And we showed it to people, 2.5 years ago. And they said, no, ignore, right? That's bad advice. I was like, what? This is like objectively good advice. And they said, well, I don't know. I remember one guy, he had like $1 million in net worth and $400,000 was Tesla stock. And the algorithm told him, you should sell 80% of your Tesla stock. And he said, no, ignore, that's bad advice.
You're not diversified.
It feels objectively correct that, you shouldn't hold more than 10% of your entire net worth in an individual stock, right? Especially something volatile like Tesla. And the thing is that, like, this is not complete advice. And we were missing something, right? And these things are very individual, right? And so there's, like, I don't think there's anything I could say on this podcast that would actually be real financial advice, because everything is, one, because I'm not allowed to, right? Because we're regulated and all that. But two, because you should buy Tesla or not, is very individual. And so for a guy, he said, it's not like I've just been buying more and more Tesla. I bought Tesla in like really early on, and it grew and grew and grew and grew in my portfolio, and now it's 40%. And so if I have to sell some, I have to pay a massive tax bill.
No, yeah, that's
also,
true.
The thing you don't understand is, if I sell 80% of my Tesla position, what am I going to do? Just sit on cash? I'm going to buy something else. So suddenly I have to sell it, and then I have to spend 40 hours doing research and figure out what else to buy. And I'm I can take the risk. I'm not risk adverse. And so I'm probably going to end up buying Google or Meta or, NVIDIA or all these other like really risky tech stocks, which is going to end up having very similar exposure to Tesla. And so if I sell Tesla, I'm going to take a big tax hit. I'm going to waste a bunch of time doing research, and I'm going to end up with some similar exposure to what I have right now. no, thank you. I don't need that. And like in talking to him, like he also had an uncle that worked at Tesla. And so he thought he had some insider information. He like was pretty convinced that like if you just wait 6 more months, after the next release of whatever next thing that Elon Musk is working on, it would go up, and then maybe he could start trimming his position then. So we really spent a lot of time like thinking like, okay, clearly he should sell some of this. But if we're going to actually give good advice to somebody, we need to think about the tax impact. We cannot tell someone to sell something without calculating the tax impact. So we built this whole tax engine, tax calculator, understanding where you live and where your income bracket is, your marginal tax rates. And there's a difference between trading dividends and income and
the capital gains tax
and short-term and long-term. And, there's so many things there. Then there's a certain psychology where, people have a certain portfolio and a certain financial situation. Very rarely do people think, everything's on fire, I got to sell everything and retool everything, right? It's much easier for people to admit to themselves that they should take one step in the right direction rather than changing everything. And so, like, we're never going to recommend more than a 10% sell of anything, at this point. We may tell you to sell, 10% of your Tesla position this month, and then next month tell you to sell another 10%, but it's a small amount every time, something reasonable. And then we can't just tell you to sell something without also recommending the thing you should buy. Exactly. And so in this case, how do we get you more risk and really help you think about diversification beyond just tech stocks, right? There must be other risky things with a high expected return that you can hold that are very uncorrelated with everything else that you hold. And so in this case, I don't remember exactly, but maybe we told them to sell 5% of his Tesla position, and here's the amount that you pay in taxes. Here's the most efficient lot that you could sell to minimize your overall taxes. And then you should buy this commodities index ETF instead with the money that you sell. And we gave that to him, after 6 iterations, working on this, trying to get it just right. And he said, okay, that makes sense. So that's something I could do today that actually feels legitimately better than just sell down 80%. And so there's a psychology there, and very similar to Iris Automation. We needed to figure out what the people really wanted. Part of it was just persistence and just building the thing, showing it to them, building it, showing, iterate, lots of feedback. And then finally, what it really came down to was just packaging it up in the right way. Right?
Interesting.
They wanted a service, they wanted, a way to be able to just see it themselves. And then it was very important to this Tesla guy that he was the one to execute it, right? He ultimately needed to be able to push the big red button and feel like he was in control. And so they said, that we do all the legwork for you, sort of 95% of the work, and then present you with something you can do sort of perfectly packaged up, and all you need to do is say yes to it. That seems to be the winning formula.
But you guys, PortfolioPilot.com, you are managing over 30 billion US dollars in assets.
So we don't manage it. It's all $30 billion connected to the platform that we can analyze and give advice on.
Okay. So how does it work basically in the most simplicity of forms, especially for the viewers today, and what makes it so powerful?
Yeah. This example that I just mentioned, it's a very common case, right? People come in and they say, some people have a financial advisor. Some people are, DIY self-directed investors. They have retirement accounts, and they have a house maybe, and they have some crypto and cash accounts and credit cards, and maybe they have some trading, Robinhood. And so you can sign up at PortfolioPilot.com for free. We ask you 12 questions. Even this is funny, right? We started off with 6 questions, and every time we add more questions, people think, okay, this is actually more serious than I thought it was. I think this AI is actually understanding me at a much more fundamental level than just asking what my risk preference is. And so the more questions we ask, the more people engage and they think like, okay, this is actually going to be useful and I'm going to get something from this. Then we ask you to import your entire net worth, but at a minimum, just copy and paste, the current positions in your portfolio. Mm-hmm. And it can be your retirement, it can be crypto, it can be your brokerage account. You can put in your real estate. I mean, truly everything. You can put in cars and jewelry and student loans, private debt, angel investments, anything. And then you come into the product and, on one level, it's just a portfolio tracker, right? We basically have to build a really good portfolio tracker. We give it away for free. That's not the part of the product that's like really differentiated. Some people just use the free portfolio tracker and not all the other stuff. We give you an assessment. And so we automatically give you this AI portfolio assessment and we tell you, this is how you're doing against your peers, people in your age bracket, people in your same net worth, people that have the same risk as you, right? Same risk appetite. How do you compare to them? We tell you, like, here's some things that are working really well. Here's some things, like some opportunities for improvement. You're paying way too much in fees, right? Or like you really, like if there's going to be a whole bunch more inflation, like your portfolio is really going to be affected properly. Here's your score. Here's your retirement readiness. How likely are you to like be set up for retirement sort of on the current trajectory that you're on? There's a whole bunch of different analysis and forecasts and tools and comparisons. There's a sandbox environment that we give you to be able to add stuff or remove stuff from your portfolio just to see what happens. Or you can run back tests and do a comparison. All of that's free, everything I just mentioned. And
So what do people pay for? What's like the paid
if you
services?
want to pay the $20 a month for the gold version of the product, then this unlocks the actual fiduciary financial advice.
Okay.
And so here we tell you, in the assessment, we tell you, like, here's some opportunities, right? Here's some things that like aren't going great for you. If you unlock the gold plan and actually get the real advice, we can tell you, sell this, buy this.
Okay.
You should get rid of this mutual fund and trade it for this similar exposure ETF. Here's some tax loss harvesting opportunities, not just once at the end of the year, but every single month. And you can take advantage of market turbulence to take losses and similar exposures, and we can help you think through the wash sale rule. It's how do you improve your retirement readiness? How do you get on top of estate planning and generating a will or thinking about guardianship for your kids? I mean, there's this whole like financial advice layer on top of it. That's, $20 a month, like, I think there's very few people that, for the amount of value they're getting, think that that's too much.
That's so much.
Right? The idea of a lot of it is controlling fear and greed, right? It's just like feeling a little bit more confident, feeling a little bit more confident about your finances, get a second opinion, feeling confident that, things are optimized, right? There's probably always a little bit more you can squeeze out. A lot of people we talk to say like, okay, I have money in sort of 8 different buckets. The retirement accounts and the loans and the house and crypto and this brokerage account and my wife's retirement accounts. I'm probably diversified because I have money in a bunch of different places. But am I really? Like, you could obviously have a whole bunch of correlated risks here. And so even just answering that question, what happens if we get another great financial crisis? What happens if there's another, Greek debt crisis? What happens if the war in Ukraine escalates? What happens if there's another .com crisis? What happens if inflation goes up again? I mean, don't you want to know, like, seems important to get the answer to that question, right? Like,
you want to be secure through the peaks and the troughs.
Yeah, it's definitely, if you've been around for more than 5-6 years, then you've probably lived through at least one major market correction.
Mm-hmm.
And, the idea that you could lose 50% of your net worth is super scary. It's very wild. This is everything you've worked for your entire life.
But the thing is, a lot of people still trust human advisors ahead of AI. But like, what are the common misconceptions about AI-driven investing, and how do you guys at PortfolioPilot.com challenge them? How do you give people the right orientation?
There's a couple of questions wrapped up into that, right? And so one of the things we heard all the time, and is like what we decided to call human financial advisor horror stories, and we started actually just collecting a lot of these stories, and we chatted with this user who dropped her human financial advisor because she wanted to take some money out, and she was sort of started doing a little bit of her own investing. She was like trying to get a little bit more confident. She would take out, $10,000 every single month to like do a little bit of her own investing. And our financial advisor at a certain point froze her account and said, "Hey, you can't keep taking money out like this. It starts looking like money laundering." And she said that like the only reason he was doing that because like she was gaining more and more confidence. She started questioning him more and more. His fees were slowly starting to go away. And it's sort of like his last ditch attempt to keep her, with his services. We see people that call themselves financial advisors, and they're really just, life insurance salesmen. A lot of financial advisors, they charge 1% fees, 1.5%, and then they put you in mutual funds that, charge another 1.5% fees. Over the course of 30 years, this really adds up, right? And it's not even tied to performance, right? This is the craziest part. It's like 1%, whether they make money
Yeah,
for you or lose money for you. I think there's something about confidence, right? There's like absolutely something about, I want a third party involved here because I don't fully trust myself, right? There must be something better I can be doing. And so I think traditionally people have gone to human financial advisors. I read a report recently that said that in 2010, about 50% of 40-year-olds had a human financial advisor.
Mm.
And in 2022, only 30% of 40-year-olds had a financial advisor. And so there's clearly some absolutely massive generational shift where people just don't feel the need to go with a human financial advisor anymore. And so, I think technically we're competing with human financial advisors, but it's very rare that someone is choosing between PortfolioPilot and a human financial advisor and, in a bake-off and, we win the deal because we undercut them on price, right? That's rarely how it happens. It's much more often the case that someone has never had a human financial advisor before, and they are just managing stuff in a spreadsheet, and they have sort of money in a couple different buckets. And there's like, it's starting to get real, right? Like they have a couple $100,000 now, sort of a net worth across my different assets. Let me see what tools are out there that help me sort of optimize this. And then they find us. Or it's the case that they're finally fed up with their financial advisor. They want to do it themselves, but they don't quite, fully trust themselves to do everything. So they're looking for a tool to help them out with a bit of advice and optimization. It's also very common that when someone gets married or they have kids or they buy a house for the very first time, they think, okay, it's got sufficiently complicated at this point where I need a third party involved here.
Mm.
And kind of feels like everything else in our lives is digital and self-serve and personalized. And so why shouldn't your financial advice be? And so especially if it has the same, fiduciary responsibility, regulated by the same, regulatory authority, the same sort of compliance infrastructure. We like to talk a lot about like removing human bias and trying to remove conflicts of interest.
You read my mind. You read my mind. That was what was on my
It's so
mind. The
important for
bias.
me, right? Like if there's a
The
human involved, there's going to be human bias no matter what. And
you know something. You know
I think the
something.
wonderful thing is like,
Sorry to interrupt you, right?
Yeah.
You know something. The last guy on this podcast, the very last episode of the podcast, episode 81, was with Travis Fox. He's a doctor of psychology, and he's very, very big on AI. And he said something that one difference between us humans and AI is the fact that AI is able to dissociate itself from any form of bias. Right. For humans, no matter how objective you may want to be as a human, you will be operating based on certain bias, and that would always inhibit or affect your decision making. And of course, it slows down the decision making.
100%.
AI,
especially with something so important as your money.
Yeah, it's so important.
Right? Oh, my cousin just made this trade, and he made $20,000 on this one trade. Maybe I should do it too, right? Or like the markets are down, and look at all these tariffs, and I just listened to this podcast with this, a couple of billionaires, and they're all talking about selling their cryptocurrency, and should I do it too? What if I just hold on for one more week? Or, it's so easy, I think, for us to deceive ourselves. And like, it's entirely possible that like the most valuable thing that we do is that we independently score your current position, and we give you a framework to think about, like, okay, this is something you can do to improve, right? If I think about my credit score, it feels very obvious to me what I need to do to improve my credit score, right? Just I log into Credit Karma, and I just keep paying my bills every month, and I keep my credit utilization under 30%, and I have no, what's this called, like the alerts on my account, like the negative remarks, and I can't open too many credit cards in the same year. It's like it feels obvious. There's a system, and I can just like over time, like just keep at the system and just improve my credit score over time, and then
just stay stable. No county court judgments. Like nothing.
Like, I feel like we're investing, and like, am I diversified or not? It's so difficult to know the answer to that question unless you have some system that just says like, okay, you're currently an 8 out of 10. And if you did this, you would get to be a 9 out of 10. And if you did this other thing, you get to 9.5. 9.5 out of 10 is excellent. Like, you don't need to be optimizing beyond that. I like that you brought up the psychology piece. Like, so much of it is psychology.
Yeah,
right? It's actually one of the most fun things about my job is that like I get to talk to so many users and people across America, and everyone has a different approach to managing money, right? And everyone has a different approach. I think everyone assumes that they're unique. And I think that it's possibly, I think a lot of people talk about AI as like, being able to look at everything at the same time and look at million different data points, and the scale is insane, and look at the intelligence explosion, and we're going to get this super AGI and super intelligence. I actually think that the biggest thing that's going to happen with AI, like the biggest benefit, is sort of just this hyper personalization. Right? Your human financial advisor is 70 different clients at the same time, and like he can't possibly manage every single account independently and stay on top of it all and do the best job.
We can't optimize all of them.
And so oftentimes these funds just have like one fund, and then they just try to convince you that that fund is the best thing for you.
Yeah, that's
So
the
that's way easier than managing your individual position. But, every single person I talk to says, I'm not like all your other clients, right? I have this weird thing going on with we probably should have rolled over this K 6 years ago, but it's sort of just hanging out there. We have this extra tax condition, or we're really weird. Like, we, no matter what, we want to hold 20% cash at all times. Just, it's a rule that me and my husband have. We're like, we're not going to change that. Okay, no problem, right? Like, that's the beautiful thing, that the AI and these automated systems can actually just meet you where you are. Kind of like Netflix, right? Just like, the more shows I watch, the more I use the product, the more it becomes interesting for me and serves
machine
up the
learning.
right content that I actually end up caring about. And once in a while, you need to serve up something random, right? To sort of just, let's try something new and knock the
Steer the
user out of
force.
their normal routine. But like, these recommender engines, they drive everything from news to social media to now human, some automated financial advice too.
Okay, our conversation is getting extremely interesting, and I think we would need a part 2, because I recollect that you have a meeting to go to. But before you run to your meeting, I think I'd ask you, with all the data that is running through your system, what have you learned about the modern investor behavior? And is there any trend that is shocking to you? Is there any trend that you probably expected? So,
Oh, excellent question. A lot. So actually, recently, we've been thinking a lot about what we think about as our marketing machine, right? Like, generate content, social, news. There's all kinds of like fascinating insights. And so we've actually started doing a whole bunch of user research, just like sort of in a, anonymized, aggregated way. Can we look at, the 30,000 users across our system and look at common trends and maybe publish those trends? And we've found tons of interesting stuff. Like, I think one thing that is very uncommon is for people to look at how much they're paying in fees. I think almost across the board, people are shocked at how much they're paying in fees. I think they're shocked at how much they're paying, and like, for their mutual funds. There are people that, some mutual funds have a front-loaded fee, like you pay money to enter into the position. Some funds have a back-loaded fee where you pay money to get out of the position, plus some sort of like expense ratio and fee that you pay as you go. A lot of retirement accounts pay crazy fees, 1%, 2%. We have a lot of Canadian users as well, and Canadian funds and retirement accounts in particular seem very bad and like very high fees. I think that it's shocking to people sometimes that they're holding so much cash. Like, not even in a money market fund or a CD or some sort of fixed income, truly just money that's just sitting there doing nothing. I was talking to someone like a month ago, and they said they assumed their retirement fund was just invested. But 3 years ago, that retirement fund sold to a different retirement fund. They cashed everybody out of their positions, and it was just sitting in cash, not making any interest, over the last 3 years. Wild.
that's horrible.
I think that the amount of people that don't know what their risk profile is and like what they're actually comfortable with in terms of risk is like, that's really surprising, actually. And you don't need to know, I'm comfortable with 13%, volatility, right? It doesn't need to be a number, but just generally across everything, like across your entire net worth, like, how risky are you really? We talked a little bit about this, right? The 3 different buckets of risk, and however you want to quantify it. I think a lot of people know that you can get higher expected returns if you take more risk, generally. But I think if, like, when confronted with this idea, that was like, we actually measure the amount of risk in your portfolio, we reflect it back to you, and we say, like, you told us that you're aggressive, but your portfolio indicates that you're actually like closer to moderately conservative, that either means that you are lying to yourself about the fact that you're aggressive, or you're missing out on like crazy potential gains here. You should be taking more risk and getting the commensurate, expected returns. And like, there's a fair amount of people that sort of like, okay, I honestly, I have to think about that. Like, I don't know which one it is. I always sort of assumed I'm aggressive, but I mean, I do buy a lot more bonds than I probably should be, and I'm holding a lot in cash. I don't know. I'm scared of putting stuff in the market, and what if it goes down? Like, that's what we're talking about here. We're talking about risk preference, right? And like a certain tolerance for risk. I think people tend to be very focused on equities and bonds. And like, I think for many people, if they think about investing, it's, stocks and bonds. Like that feels like, obviously it's massive, right? There's thousands of different things you can invest in if you're only focused on stocks and bonds. But I think a lot of people don't think about real estate as like a potential way to do investing. They don't think about inflation-linked bonds, which is like a really interesting thing. It's like a potential inflation hedge. They don't think about commodities as like something they could actually own as a retail investor.
How about ETFs?
Yeah, sorry. Even like, I mean, ETFs, whether it's individual stocks or like an ETF of stocks, right? I'm just thinking like there's all the kinds of different asset classes and, beyond equities and fixed income. And but I think people don't really think about taking advantage of that. And like when it comes up that, our system recommends that someone buys a commodities index fund, I often get like, oh, I honestly just didn't even know I could do that. What commodities index fund, they read it, it's like, okay, interesting. There's, futures, there's a wheat futures and, lumber and oil, gas. And like ends up being like, I mean, it's typically seen, at least in the hedge fund world, as sort of a hedge against, against inflation. Sort of like this is general raw materials risk. And what happens if gas gets out of control? Then, it's possible that, Apple goes down because Apple really depends on transportation costs, right? And if oil goes through the roof, then transportation goes through the roof and, causes inflation across the board. Like, I've convinced him to come on for part 2. Like,
okay, what should we do? How many minutes do we have left?
A couple minutes.
Okay. So yeah, you can just round up on the investment options, right? Commodities, even gold. A lot of people don't consider these things. I think it's likely due to 2 words, or would I say, financial education.
I think education is a huge part of it, right? So at a certain
not just education, financial education, because
financial education, absolutely.
I've met people who are doctors in like different crazy technical fields.
Educated people I talk to, right? Every single day, business owners and professionals of this and deep experts
they don't know anything
like,
about financial education.
I'm just getting started on investing, and I was thinking about just paying off like my entire mortgage, and it's like a 3% every single year, and I was like, okay, well, I mean, you should weigh that against all these other things, all these other opportunities, and I think even something like financial education, right, is like it's very personalized. No one wants to just read a blog about investing terms, and even then, like you want to think about practical applications and real investing scenarios. I think like when you're talking about sort of asset classes, and I think we thought, so one of the things like how maybe a year ago, 2 years ago, we thought a lot about like, okay, why exactly do people go with human financial advisors? We like took a whiteboard and we just wrote out like all the reasons why someone might go to a financial advisor. Obviously, number one, investing advice, right? But after investing advice, I think that there's something about like taxes, estate planning, so just tracking everything all in one place, just a second opinion, right? I think a lot of it has to do with proactiveness too. And so, especially if I'm talking to investors, I get this question all the time of like, why can't people just use ChatGPT? It's pretty smart. And even if it's not ChatGPT, here in 2025, but like, what if we get to the next model? 4.5 is pretty good, but what about,
4.5 is
version
great, bro.
5? And I think a lot of the answer is that people just don't know what questions to ask, right? Like, if I go to a human financial advisor, I will sit down and they'll just ask me 20 minutes of questions about my situation. Where do you live and what's your goals and risk appetite and are you focused on growth or not? Do you have kids? Saving for college? What do your accounts look like? And then they'll start saying like, okay, I think the thing we should start focusing on is, this tax thing over here, or you're not thinking about gold and commodities at all. Let's think about adding that to your portfolio. And there's like this proactive piece to financial advice. Like, I think a lot of people trust the human financial advisor because it sort of feels like this always on, I don't need to be thinking about it because someone else is thinking about it. And if there's a problem, they'll call me up or they'll send me an email. And I think once we figured that out, then suddenly it became way more obvious, like what we needed to build for a PortfolioPilot. But the fact that we will proactively send out an email at the start of every month and say, here's the top 3 things you should do. It takes less than 10 minutes and like you'll be better off for it, right? Like, it will improve your financial health. That feels like one of those things that like I could have spent, 5 hours of ChatGPT and never landed on these things that come up here because you need some proactive agent type system to go out and ask those questions and discover those things and figure it out and then sort of bring it to you. And so, if you sort of dissect the human financial advisor, sort of like break apart all those different things, I also think that's the main reason why robo-advisors haven't replaced human financial advisors, right? It's just one part of this entire experience. Or why like there's 1,001 trading tools out there and Bloomberg Lite for DIY investors or Wall Street Bets or Motley Fool or, any number of newsletters you can subscribe to that keep you up to date with what's happening in the markets. But I don't know. I think 5% of the population wants to do that. They like sort of staying on top of it as a hobby. But the other 95%, just they're a little bit lazier like me. Right? I don't want to be like an active day trader and be super involved. I like the idea that there's some like AI that's sort of looking at things and knows my preferences and then at the right time, brings me the information and then lets
right
me make
recommendations.
And that's, I think that's what people pay human financial advisors for. Like, that's the service that they're paying for. That's the peace of mind and sort of like the feeling like I'm doing something responsible and there's this third party involved in my finances to sort of keep me on track and keep optimizing.
I think there's also that element of trust, right? And accountability. For some people, they feel like at least if something goes wrong, the human advisor is tangible. Yeah, we could sue him to court. We could get a hold of him, but if ChatGPT advises me wrongly,
exactly,
what am I going to do? A lot of people believe more in tangible assets, tangible, activities than intangibles. And yeah, it's very, very well understood. So it's difficult to achieve that mindset shift. But AI is the future. We have no choice.
I even think people are underestimating like really what's coming with AI. And I still think a significant amount of people think that these large language models are just regurgitating things they've seen on the internet. And it is wild. Like, I truly think there's like, I think there's like a sort of growing consciousness there that people are absolutely underestimating.
Exactly, but I think it's just a matter of time. It's like a wave. It's like a tsunami wave. It's either you get in line or you get washed, along the line.
Yeah,
So
exactly. The time
we'll
to
see.
start running was like a year ago.
It's never too late to start running. Well, wow, speaking of running, I think it's high time we got you running to your meeting and, of course, get you ready to set up our part two, because it has been really, really, I don't know. I don't know the adjective to qualify how fantastic it has been, our session today. I like to say something. My philosophy is a philosophy of gratitude. Gratitude is good attitude. And of course, if somebody shares their time with you, it means you're sharing their life with you, because the SI unit for measuring life is time. And of course, thank you very much, Alex. Love and respect to you for sharing your time and your life with us on the pod today. And we're looking forward to our part two.
Wonderful.
Do you want to leave a
I
shout
look forward
out?
to it as well. Thanks so much for having me on, and we'll chat again.
Do you want to leave a shout out to anybody? Okay, cheers, man.
Wonderful. Hey, thanks so much.
Okay.
Yeah, truly. I'll get Gabriel just to schedule another call, and we'll do it again.
Okay.
It was good.
Okay,
I
sure,
like this sort of
sure.
like